evening, and thank you for sharing your evening with us. Tonight's webinar is entitled Home Buying Made Easier. My name is Myra Kasuk, and I am the Financial Education Coordinator here at LAPFCU. The duration of this webinar is scheduled to go for 1 hour and is being recorded. This is an interactive presentation that at times requires participation in the form of you either raising your hand when I ask a question or me placing your hand down using the hand icon. For those attending a webinar for the first time, allow me to draw your attention to the GoToWebinar toolbar that was launched when you joined the presentation. Please take a moment to locate your name in the toolbar. Once you do that, notice that there are a series of icons, one resembling a hand. Go ahead and click on the hand icon for me. This is how you will raise your hand when I or the presenters ask a question that you wish to participate in. So if you can go ahead and take a moment to do that, just so I know everyone can hear me. Okay, thank you. I see hands going up. To lower your hand, simply click the icon again, or you can wait for me to lower your hand for you. If you have a question, you can also go over to the question section. Simply maximize the question pane and type in your question. So let's just practice that just for a quick moment. You go over to the question section, and you can just type in, I can hear you. Thank you very much. I can hear you. I see this is just a test. Perfect. In the essence of time, all questions will be addressed at the end of tonight's webinar, as I'm sure many of your questions might be answered within the presentation itself. Because all of your questions are important to us, feel free to jot down your questions during the presentation so that you do not forget to ask it at the end of the event, in the event it was not already addressed. Today's agenda will include making a decision to buy, finding a home, Home Advantage Real Estate Resource and Rebate Program. We'll also go over the purchasing process, financing and loan programs, as well as selecting an agent. Tonight's speakers have an extensive background in the mortgage industry and are excited to share their information and offer assistance. Your first presenter has over 3 decades of helping his clients visualize and obtain their goal in purchasing or selling a home. Please welcome licensed agent and broker, Brad.
Thank you very much, Myra. Happy Tuesday, everyone, and welcome to the webinar. I hope we can answer the questions for you this evening. We're here to take fantastic care of you. So I want to reach out and say hello. Like I said, I've been in business for over 38 years. Last year, we helped 164 families buy or sell a property. So it's my pleasure to help you. With any questions you have, we're here for you. So just want to get into the meat and potatoes of what we're going to talk about this evening. Making the decision to buy a property. Some of the options that we'll be talking about this evening is renting versus buying. We're going to talk about having a steady income, down payment requirements, a little bit about the interest rates. Seven will speak more to you about that. And I'm going to speak a little bit about some reasonable prices for the homes. First, we'll talk about renting comparing to buying. When you rent a house, you're not going to get any tax benefits. It may cost a little bit less than buying. Of course, you also have less responsibility. You won't have the maintenance and the repairs. And of course, if you want to relocate, most of the time you have like a 1-year lease. It's easy to, bail at the end of 1 year and go someplace else. The one challenge with renting is that your rent will probably go up. LA market is in a very expensive market, so most of the time the rents are going up on a yearly basis, anywhere from 3, 5, and I've seen some increases up to 10%, depending on location. It's all about location, location, location. The great benefits about buying are you can get wonderful tax write-off. So actuality, the government is paying part of your mortgage payment. You should talk with your CPA, because I can't give tax advice, but you write off the interest right off your income tax, so you're not paying as much as taxes. But as I said, I'm not a CPA, so talk with them about that. But there are great tax benefits about buying. As you probably all have noticed, LA market is a very strong market. I've been doing this for, as I said, many, many years. We have a lot of people that are coming into the LA market. When you talk about U.S. globally, we're the #2 market, LA area, in the United States for people to come in and invest their money from around the world. And there's over 185 different nationalities and countries that are bringing money in. The #1 location is New York City, and #2 is LA. So that's helped drive up the appreciation into our market. So it's been a fantastic investment for people that have bought properties here. The great news about buying is that you can have a pride of ownership. You can spend some money, sweat equity, working on your landscaping, on the property, doing the outside painting. You could do some renovations, light renovations, kitchen remodels, bathroom remodels, etc. The downside is that you'll be responsible for the maintenance and repairs, but that's, you're increasing the value of your property. That'll be worth more, in the future. And you'll probably have a little bit higher mortgage payment than you would have if you were renting. But basically, you're investing in yourself, your future, your property is going to go up. We'll talk about steady income. When you're purchasing your property, unless you're purchasing with cash, you'll need to provide the lender with what, have a steady stream of income. You're going to talk with Seven. He'll talk a little bit later, but they're going to want 1 or 2 years tax returns. If you have your own business, it's a little bit more complicated. They really look at your business and what you're doing. If you're getting a paycheck, it's much easier for the qualifications. Most of the time, the lenders are looking for 2 years plus history of income. Talk next about interest rates. Lower interest rates means that the consumer doesn't have to pay as much in finance charges, which saves them money. The interest rates, they have gone up last year to this year. I think last year the low is 3.5. Right now we're somewhere around 4.5. It fluctuates. But when I got into business, just to give you an idea, back in '79 the interest rates were 12 7/8, and they went up from there. So we're still at very historical low interest rates. So you've got a much greater buying power that you can go out and buy something, in today's market than you can years ago. Next, talk about reasonable prices. You should be able to afford, 2.5 times your annual salary. You can use a mortgage calculator to assist you in determining how much you can, with your income, your debts, and expenses, you can afford in your monthly payment. And again, Seven's here for you. He's here to take great care of you, and he's caring and has compassion for you. Next, we talk about finding a home. I think the first thing you want to do is you have to figure out what kind of location you're looking for. I tell clients, in the locations, depending on where you work, you want to drive around the neighborhood, nights, weekends. Also see if you're commuting to work. How long is it going to be? If you're working, I don't know what your shift is, but if you're working, say, a 9 to 5 or a 7 to 3:30 shift, figure out what time you're going to have to leave the house out in the morning and in the afternoon, or whatever your shift is, just to give an idea of what your commute time is going to be. I tell clients, you don't want to have any surprises thinking, gee whiz, you drove there at 10 a.m. on Saturday, and then you go to work and you leave at 6:30, and it's instead of being 30 minutes, it's an hour and a half to commute. So figure out what your drive time is going to be, and go out there and actually be, what in the commute time that you would be going, and actually drive it. Most of the clients today are looking online. With the web today, it's incredibly easy, and I'll talk about that in a few minutes, of how you can get online and start searching for homes. Myself and a few other agents have partnered up with the credit union with the Home Advantage program. so that we can help you find a home and work on getting you a rebate for closing costs. You want to make a list of what your top wants are for a home. You know, how many bedrooms, how many baths, maybe the size of the yard, you know, walking distance to a school. There's a few things that are your wish list and must-haves. I tell clients in today's market, because it's an extremely aggressive market with a lot of buyers in the market today in competition, you know, you're probably not going to get 100% of what you're looking for, but maybe hit like a 65 to 75% of what you're looking for. Yeah, I've been in the, you know, have my own house. I've been in 15 years. It's still not my dream house, but I got like about 70% of what I was looking for. So I would say work on what you must have and figure out what you can live with. And, you know, put in the order of top priorities. Next, we'll talk about the Home Advantage program. What's it all about? Home Advantage is the LA Police Federal Credit Union's one-stop, you know, shop for looking for homes for buying or selling. You get access to the MLS search portal, which sets up alerts that meet your criteria and sends you out property on a daily basis. Also, you get a 20% rebate of what the agent actually makes in their commission. So that can go towards your closing costs. Some of the clients have used it after the close of escrow to buy furniture and stuff like that, but 99% have actually used it as a credit through escrow, and then you don't have to bring as much money in for your closing costs, and then you can use the money for whatever you want to do, fix up, buying furniture down the road, but it comes right through the escrow. As I said, that's, I think, the best way to do it, but that's something that, you know, that's your decision. You have access to a bunch of top agents that are specializing and working with the police family, and we're here to take incredibly great care of you. How it works. Basically, you register online. It's fast, it's simple, and you can receive immediate access to the credit union and their resources. You can connect to an agent, and then you can also apply for a mortgage right online. Seven would be happy also to speak with you in the phone or in person, but you can do it online. It makes it pretty easy. And as I said before, you get 20% of your real estate agent's commission when you're working with a Home Advantage real estate agent. Basically, you can go online on the LAP, the Police Federal Credit Union website, and you can click on the box that says Services and Resources. So that's where you start off. You click there. And then from there, you get a scroll down menu, and you click on Home Advantage. Once you do that, you'll see the little box again, and you'll click on the word Home Advantage again in the link. From there, it'll go out, it'll tell you you're going to a third-party website. That's the Home Advantage site to set up your MLS search and work on your setting up your drip system. So you would click on the button, continue, and then go right along. On the next page, it says join free. So you would click on that box to sign and join up. Then after you go to the next box to scroll down, you'll put in your name, your email address, you'll set up your password and which credit union you belong to. And then basically, you know, what your time frame is. Are you already pre-qualified with Seven for the mortgage? Do you have a real estate agent? Do you need a real estate agent? And once you fill that out, you'll hit submit. Once you have hit submit, then you can go and start searching for homes. And then one example is showing you 91406 zip code, and then you can click on Find Your Perfect Home. So there'll be lots of homes in that zip code. You can see quite a few. So then once you're there, you'd go into the Advanced Search button. The Advanced Search button, you might want to put in, this is my price range I'm looking for. How many bedrooms and baths? Do you have a special square footage requirement? Single family, you're looking for a condo, and then you'll hit the search button. And then once you do that, you'll hit list view. So you can list, look at the list that you've just set up. And then from there, it'll show you all the properties that you can scroll on. Once you've done that, if you need help with an agent, you'll click on the Find an Agent button. and then basically you'll probably be in California, and then you can scroll in how many, Van Nuys, what cities you're looking for. You can pick one or multiple cities and then hit search. You can set up and do it online, like I just explained to you, or you can call the CU extension, and they can hook us up with a great agent for you. Or you can also send an email out. We're on standby to take great care of you, and that's the one way of finding an agent. Next, we'll talk about you've got an agent, you're out looking for a property, and now it's time to get an offer. So ask your agent for comparables, comps as we call it. So they can go out there and they can basically do a comps a few ways. They can do, if it's a subdivision, they can do a subdivision search for you in the last 6 months or a year. They can also do like maybe a 1 mile radius for you. You want to looking for like comparables, and ask your agent to provide that for you. Before you go out there and find the dream home, make sure that we've got your pre-approval with 7. Once you want to write an offer, you're going to need to have a pre-approval to send into it with the offer. You don't want to be out there waiting for 7 to get a pre-approval. If it's your offer and a couple other offers, we want to make sure that you get your offer in with a pre-approval in with the offer. When you're making an offer, you don't want to write something too low, because you won't even get a counter. If you're writing it too high, you might be paying too much for the house. When you're working with 7, we'll get an appraisal with the bank for you to make sure you're not paying too much for it. That's that'll help also by pulling the comps, and then 7 will pull it. So that'll give you an idea what the market value is of the property. So hopefully you'll get a counter offer on the property, and we can get that home in escrow for you. Also, a great thing to do with your offer is, I always tell clients to do what I call a warm and fuzzy letter. You can take a picture of yourself, write a nice warm fuzzy letter, how you love the house. Maybe the picture on the wall reminded you of your grandmother, or you got the same sports interest. If there's a way that you can connect with the seller, especially if there's multiple bids, that will help. A picture of you and your spouse, or you and your pets, anything that you can do as a letter to go with the offer will help out a lot. So I always encourage clients to write an offer and also do a warm fuzzy letter with a picture, and send it in with the offer. Once your offer is accepted, usually within 3 business days, they'll ask you to wire a 3% deposit into the escrow. That's called good faith deposit. So that sits there. You've got some contingencies that your money is not at risk in the very beginning. So basically, you'll put your deposit, your escrow is open, and you'll receive escrow instructions. It's basically a little bit same as the purchase offer. There's just a lot more detail. The escrow will coordinate. They're the closing that take documentations from all parties. So basically, they will send out paperwork into the seller. They'll ask them, do they have any loans to pay off? They'll work on paying those loans off through escrow. They'll also make sure that the buyer or seller don't have any tax liens. They want to make sure you get the property free and clear of all encumbrances, and they will put the new loan on at close of escrow for you. So they coordinate all that. The escrow, as I said, is a neutral third party which holds the funds and all the conditions and will close the escrow out. So they're the one that do all the paperwork. They'll tell you how much funds you need. They'll prorate the taxes. You'll get your insurance policy, your homeowner's insurance policy. That'll go into escrow. That will protect the lender in case of like a fire, or it also covers you in case you had a slip and fall at the property, or someone broke in. You'll get insurance and cover your valuables at the property. Basically, escrow works on completing the paperwork as I talked about. They'll give you an estimated closing cost. You'll also get one for 7 in the beginning, but the escrow company will give you a little bit more detailed analysis of what you actually need for the closing. as I spoke prior, when you're working with 7, you're actually getting an appraisal on the property, and that'll help you understand, the value of the property, what the bank is using for comps in the neighborhood. So your agent, real estate agent, or 7 can also explain the appraisal process to you. It's critical, and I tell the clients it's always important to get a home inspection of the property. The contract standard time frame is 17 days. Sometimes if there's multiple offers or the agent will want something a little bit sooner, they'll shorten the time frame from 7 to 10 days. 99.999, we don't have any issues with our home inspectors that we work with getting the inspection done in that time frame. They'll give you a snapshot of what the house looks like. They'll check out the major components, the roof, the electrical, the plumbing, things along those natures. They might also, if you have a chimney, they might tell you that it's important to have a chimney inspection, which you should do. And also, basically, they should be crawling, underneath the house and checking out the pipes, going in the attic and checking in the insulation, checking out the roof and see how things are looking. Also, I recommend having a sewer camera go out and checking the sewer line. That could be a big expense. So they'll send a camera down and run it all the way from the house all the way out to the main connection at the street. So that's also an important inspection that I would also recommend. As I spoke prior, it's important to have, your homeowner's insurance. That'll insure the lender, also insure you, and the lender will request that. Right prior to close of escrow, your loan docs will be, set up for you to sign. Most of the time, you'll sign it in the escrow office. Now and then, you can sign it, depending on, you can speak with 7 about that. He may go over the paperwork with you over the phone, online, in the branch. That's something you'll have a conversation with him to do. So after you get the loan docs, you'll sign the loan docs. They will go back to the lender, and the lender will fund the loan. And once the lender funds a loan, the next business day, it will record and you will get keys to the property. Now and then, the seller will ask for maybe close of escrow in 2 or 3 days to get out of the house, which is typical. That's something that your real estate agent can explain to you. You'll get the keys, and you'll either get keys at close of escrow. They usually do it at 5 p.m. or maybe 2 or 3 days afterwards at 5 p.m. And your agent will get the keys for you, and you can get them from him at the office, or maybe he'll meet you at the house. That's something that you can coordinate, and then you can work on setting up your move-in. 7, take it away. It's up to you now.
Thank you, Brad. As I discussed earlier, this is Myra. Thank you very much. As we discussed earlier, we will open up for questions and concerns after the presentation. At this time, I would like to introduce to you Severiano Rico, a mortgage loan officer here at the credit union. Sever brings with him 17 years of mortgage banking experience. He has worked with major financial institutions and is well-versed in the mortgage process. But don't take it from me. 7, they're all yours.
Thank you, Myra. Thank you, Myra. And here we are live recording from LAPFCU studios here in Van Nuys. Thank you for that lovely introduction. And so let's get right into it. Yes, I'm a mortgage loan officer, 17 years experience, and now I am an advocate for our members here. And thank you for the opportunity to be here tonight. Let's look at the market overview. What will this year's market look like? What will happen with interest rates? This is probably the #1 question I get from all our members. Are the interest rates going to go up, or are they going to go down? And I tell our members, if I knew that with certainty, I would not be working here. I'd be a millionaire, billionaire probably somewhere. But we do have some indicators. Let's look at what's going on now. Right now, the Federal Reserve is forecasting that interest rates will be rising slightly. They just rose the interest rate a couple of weeks ago, actually, by a 0.25%. So what we see here is a slight increase in interest rate. That's now the U.S. can go to war. There's some major international, global, or even national emergency can happen that will shake up the markets. But barring that or putting that aside, we're looking that rates are steadily on the rise. Good time to buy would be now, because like Brad said, historically, we're at very low interest rates. I mean, he's talking about 12%. That was in 79. So definitely a good time to buy. Now, we'll be talking about pre-qualifications versus pre-approval, private mortgage insurance, application checklist, and the LAPFCU advantage. Now, before we go into pre-qualifications and pre-approvals, it's important that we get our credit in shape. We do that by paying all your bills on time, do not max out any credit cards, do not take on any new debt, and make saving money a goal. I cannot stress that third one enough. Do not take on new debt. We've had several instances where members are in the middle of a purchase transaction and they go out and buy a nice Lexus. And what happens is, now that you've incurred that new debt or that payment, we have to count it against you and reapprove the loan. And sometimes that means that you might be able to pay higher fees. Maybe an interest rate would have to go up to offset the fees, or even not even qualify for the house anymore. So please, do not incur new debt during the process. After you buy your house, buy 100 cars, buy a car lot. We have plenty of programs here to help you in loans for autos after the purchase of the house. That's really important. Now, let's look at the differences between pre-qualifications and pre-approvals. Pre-qualification, we take an estimate of what you can afford. We take information from you, we'll sit down, it could be over the phone, it could be here at the branch in Van Nuys, but we take your information. Where are you working at? How long? How much are you making? What do you have in the bank? What's the source of the down payment? And all these are verbal. So there's no documentation provided and no verification performed. We will generate a credit report. And what we do is, with that information, we'll give you a pre-qualification letter if your pre-qualification application has been approved. And it will say you've been pre-qualified, for the purchase price of $500,000 and a loan of $300,000. You can confidently go out to the market and look at properties, say, in that range that you've been pre-qualified for. This is essential, as we have members coming in after the fact saying, I've seen these houses, $800,000, $900,000, and we're just in love with it. And then they want to get pre-qualified. So this is really difficult. We want to get a pre-qualification done first so we have a good idea, an estimate of what you can afford. Now, a pre-approval, on the other hand, is a little more in depth. And it's more when you're ready to make that offer. A pre-approval is a lender's commitment to lend subject to required conditions. Income verified with pay stubs for tax returns. Liquid assets verified with bank statements, IRAs, stocks, etc., and a credit report is generated. So where they differ is the pre-approval is basically the pre-qualification, but we're going to verify that you do make such and such money. We're going to look at the tax returns. We're going to look at the source of income. Usually it's 2 months of bank statements. And this is good when we're ready to make that offer, because an offer is more solid when it's accompanied by pre-approval, because a seller will look at the offer, they'll look at the pre-approval and say, wow, the credit union's already reviewed the documents. This is a solid offer. So that's really the differences between the pre-qualification and a pre-approval. Private mortgage insurance. Now, this facilitates individuals with good credit to purchase a home with less than 20% down payment, and it does not reduce principal on the loan. So this is a policy that's issued out with members that are putting less than 20% down, because the loan is seen as to be more risky. So there's a policy that's taking on a portion of the mortgage. Now, that premium does not go towards paying off the loan. It's a separate premium, and the amount of that premium is based on a number of factors. For example, credit score, amount of down payment, what your liabilities are, and how much income you're bringing in, amongst others. So there's a couple of exceptions for the 20% down rule, and we'll go over that shortly. Now, the types of loans and most popular loan products that we have for purchase on primary residence, second homes, or vacation homes, or investment. We also have fixed rate, which is where the rate stays the same over the life of the loan. Usually it's a higher interest rate than an adjustable interest rate. And then the adjustable interest rate is the rate adjusted over the life of the loan, usually at a lower start rate. We have, for example, our 5-5 ARM. That is specifically here, our proprietary 5-5 ARM here at the credit union. Now, this will allow you to come in 10% with no PMI should you qualify. That means no private mortgage insurance with 10%. And the way it works is like this. We have a loan that's fixed for 5 years at a low interest rate. Should you stay with that loan in 5 years and not refinance out of it, it would adjust once every 5 years thereafter. But it will allow you to come in with less than 20% and not pay that PMI or private mortgage insurance. Now, common loan programs, we have conforming, jumbo and super jumbo, home equity lines of credit and fixed seconds, and government loans, FHA, VA, and reverse mortgages. Now, the conforming would be anything below $657,500. Anything above that would be considered jumbo. And we're looking at home equity lines of credit and fixed seconds. Those are available, and that's really to take advantage. We do have members that say take out equity to maybe repair homes or take out the equity to do debt consolidation. And we also do work with a credit union partner for government loans, FHA, VA, and reverse mortgages. I do want to just stress, however, that we do offer a 3% down first-time homebuyer loan program. Now, we have to meet certain qualifications, but that's something that is offered here at the credit union. That would be 3% down, a first-time homebuyer. And a first-time homebuyer is, we consider first-time homebuyer someone who has not owned a house within the last 3 years. Now, some homebuyer tips. Get pre-approved before you begin your search. I can't stress how many hearts have been broken. You know, you go out there, you fall in love with this house and, you know, $900,000, and you come here and you find out that you cannot afford, you know. And so, you know, we really want to avoid that situation by getting pre-approved or even pre-qualified before you begin your search, you know. And, you know, if you don't do that, I mean, it's going to earn my nickname of the heartbreaker here. I hate giving that bad news. I know you fell in love with that house, but please get pre-qualified and pre-approved. All right. Keep your credit current. Make all your payments on time. Watch your spending patterns and avoid incurring new debt before applying for the loan. Don't incur new debt after you have completed a loan application for your home. Do not have anyone except your loan consultant run your credit. Beware of free credit report websites. I cannot stress that enough. So the thing is we don't want multiple pulls on your credit. You know, if you're shopping around with, you know, a lender, that's one thing. But if you're having multiple people in a short period of time run your credit, that could have an impact and lower your credit score. So you really do want to make sure you're avoiding that. Also, advise your lender if you have any recent credit transactions during the loan process. So this comes up sometimes. You know, there's big credit transactions, like I said, the car, or you take out a new credit card during the process. Please make us aware. Also, I just wanted to let you know that later on, Myra will provide a way for you to get set up with Home Advantage and receive a complimentary mortgage and insurance consultation at the end of the presentation. So stick around. The LAPFCU Advantage. This is my favorite part. We have over 18 different purchase and refinance loan programs to choose from. We provide hands-on service. You're not a file in a pile. I like that. You're not a file in a pile. And I'll tell you how we can provide the hands-on service. We're different than a lot of financial institutions in that the whole process, whether it's a purchase or refinance, is done under one roof. I can be your contact person, and I can be there for you along the whole process to funding. You know, if you want to follow up, get an update, I always make myself available to our members. Everything is done under one roof. I know a lot of financial institutions, they handle the processing off-site, sometimes even out of state. Here, it's all done here in the office here in Van Nuys. So that's a huge plus. It's a huge plus because it could also expedite, the process, especially sensitive for purchases. You can apply for a mortgage, get pre-approved online at LAPFCU.org. You can apply for equity loans at LAPFCU.org. We also have no-cost loan options. And now you can lock in the interest rate even at application if we're looking at refinance or after you have the loan or the offer accepted. So when you have the purchase contract, we're able to lock in that interest rate. Now, before I finish, I would welcome the opportunity to speak with you about individual mortgage needs. Now, that's important because every situation is different. And so, if you're thinking, well, this doesn't really apply to me because I have a bankruptcy, 5 years ago or foreclosure or things like that, I'd love to speak with you one-on-one. Let's get the facts and let's give it a chance here. And so that's really important because we offer so many different programs here, and we're really advocating for our members here. We'd really like to get you into your home. So with that, I want to say thank you. Wow, that went by really fast.
It did.
It did, right?
You did a great job. Thank you, Seven.
And I look forward to speaking with you guys.
So before we open it up for questions, I do want to talk to you about something else that's extremely important when you're considering buying a home. And that is how important it is for you to have insurance. As I prepare to wrap up tonight's presentation, I do want to add that obtaining homeowners insurance is a lender requirement. You see how that works is homeowners insurance protects you in the event something goes wrong, but it also protects the lender's collateral. So that collateral is the home that the lender can foreclose on if you default on your loan. Homeowners insurance can protect you against things such as liability, theft, fire, floods, earthquakes, and more. So again, remember, insurance is also, it is an expense that you will need to factor into the home ownership equation, and that the credit union offers it with competitive pricing and discount through LAPFCU insurance. And that person who is the contact for LAPFCU insurance is based here in Van Nuys, and her name is Maria Asensio. Her direct line is 818-373-8384, and her email address is there. It's Cuso@BISINS, which is for BickleMeyerInsurance.com. I'll leave that up just for a few minutes. Again, the credit union offers insurance at competitive pricing, and the discounts that we offer through LAPFCU are great. Again, the number on your screen is for insurance information, which is a lender requirement. At this time, I am going to open it up for questions. We've had a few questions that have come in already. Some of them are around the lines of tax. So we have quite a few questions that have to do with tax benefits. And I believe, Seven, we were talking about they would need to talk to their tax advisor, anything that specifically involves a tax question?
Yes, anything with taxes, we cannot stress that enough. You need to speak to your tax advisor, your CPA, because it's not all just a blanket policy. A lot has to do with the type of house, the equity, how much you're making, and all that. And so you definitely need to speak with your CPA.
Okay. We have another question. Does LAPFCU offer FHA loans?
So we do work with, we have a CPU partner that deals with FHA loans. We can definitely help facilitate that. But usually when someone asks me about FHA loans, I ask, why are you pursuing the FHA loan? Usually the answer I get is because it's a 3.5% down. But here in the credit union, in-house, we offer a 3% down, slightly lower. It could be crucial when we're talking about such a low down payment. 3% down, so we have some qualifications, but definitely speak with me and see if we can get you qualified for that 3%, which is even lower.
Great. I know that there are a few people typing in questions now. Let me just quickly go over how you will be able to ask a question for those of you that are attending for your very first time. So like I explained earlier, you're just going to open up that question pane and type in your question. Please raise the hand icon if you are in the process of typing a question, so I know to expect questions in the queue, and I won't assume that we don't have any more. For those of you, again, attending the live webinar for the first time, you will notice that in that question pane, you are able to type in your question there. And if you're using a mobile device, you're simply going to hit on the question mark. So it looks like a question mark, and you'll just put in your question as you would as if you were sending a text message. So we have a couple more questions that are coming through. Your next question is, could you please explain reverse mortgage?
So in reverse mortgage, what you're doing is now this is for a mortgage that's really reserved for senior citizens. And this actually actual age requirements, and this is where you're not making payments, you're actually receiving money from your equity. Now, again, this is very specific to the situation, and so what I would urge the person who's asking that question is to give me a call to go over the specifics. But basically what it is you're not making payments on a mortgage, you're actually taking the equity from the property, and this program is reserved for, I think the age is somewhere about 62 or something like that, okay. But definitely, we can definitely look into that.
Okay. And I want to stress, because you said for the person to give you a call, I will be sending out a survey within the next business day for this presentation. And so if you do want to talk to Seven or Brad or get set up with Home Advantage, you will have an opportunity to do that, and we'll ask for your information on that as well. Your next question is the Home Advantage program, and so Brad, this may be for you, and you can probably answer it as well, is the Home Advantage program only for California residents?
To my knowledge, you can use it out of state too. I think we've worked with some police officers that have bought properties out of state, like a secondary property, or they've retired and sold a property and bought another one out of state, and we have worked with them, and they're able to get the rebate.
Okay, thank you, Brad. It looks like the next question is me. It says, will a copy of this webinar be available after it's over? Yes, it will. It usually takes me anywhere between 1 to 2 business days to get everything uploaded. And once we have that uploaded, we will be sending a link out to you for all that have attended the copy of the recorded session. So you're more than welcome to then watch it over again, pause it at your leisure to be able to take notes in the event that maybe we were going too fast, or you didn't hear something, or maybe you just walked away for whatever reason. So yes, it is being recorded, and all the questions will be included in that as well. We also do provide it on our webpage as well, under our recorded webinars. So you have it on your webpage as well. Next question is, does LAPFCU offer the GSFA program? And I'm not sure what that is. So for the members that typed that, the GSFA program, it might be something, a special name under another institution. We'll look that up and we'll come right back to that question. While we're looking that information up, just to make sure we give you the accurate answer, we have another question that says average escrow cost, for example, is $400,000. What's the average escrow cost for a $400,000 home? Brad?
Okay, I was going to ask Kevin if you want to do that. Usually the escrow will have a base fee. It's usually like $2 or $250, $200, and then maybe like a $2 to $2.50 per thousand. So basically you're doing $400,000 and it was, $2 base and $200. So it would be, it was a $200 base and $2 per thousand. The base escrow fee would be approximately $800. Seven, what do you calculate for the escrow fees? And
No, it's definitely along those same lines, and obviously they're going to vary with the purchase price. But as far as base, it's along those same lines.
Okay, so somewhere like between $2 and $2.50 base, and plus like $2 to $2.50 per thousand. So 400,000, if I put in $200 base fee and $2 per thousand, your escrow fee would be $800. And if you're tight with funds, depending on the competition of offers, you may be able to ask for. We've had clients ask for up to 3% towards your closing costs. So sometimes the sellers, depending on the competition. I mean, if you're competing with, you got multiple bids, it's hard to get any credit. But if you're the only one making an offer on a property, you may be able to get the seller to maybe pay your for your escrow closing costs, which could include, your escrow and a couple other fees. So that's something you can talk with your real estate agent about.
Okay, thank you, Brad. And it looks like we do have a response to that GSFA program.
Yes. So GSFA is a grant program. There are some lenders that work directly with the down payment assistance programs. And here at the credit union, we do not work with the GSFA.
Okay, thank you. The next question is, I have $75,000 in student loans, and that's holding me back from looking into home buying. I've been working on savings, and I'm at about $10,000. My question is, should I pay down student loans or go ahead and look into buying now?
Okay, so that's a perfect example that we need to talk one-on-one, because that's just one piece of the puzzle that we're going to be looking at, or the piece of the puzzle. We're going to be looking not only on the debt that you currently have, but also how much you're making, how much you're putting down, how long have you been at the job. I get this question often where it's just one, I get one piece of information. We need to look at the whole. So what's going on? So definitely reach out to me, and Mara will give you that contact information, because I'd love to look at that, because that's just one, piece that we have there. I'd like to look at the complete picture.
Okay, thank you.
Go
ahead, Brad.
My comments on that is, my feeling, you can talk with Seven. Yeah, I'd work and go getting qualified. I think the sooner you get into the market, the better you're going to be. I think the interest rates are going to continue to go up, over the long term. If it's going to go up 2 or 3 more times, the interest rates are going to go up. I mean, they're not going to stay at historical lows. If you can get, into a house now, if it takes you, 7 years to pay off that $75,000 and save up, the homes that you're looking for today are going to be, I would say, a lot more expensive, and the interest rate's going to be higher. So I would at least talk with Seven about going out and maybe be able to, with your down payment and keeping your student loan, being able to purchase in today's market, because you'll get some write-off too. As I said, we have to talk to your CPA, and that'll cover some of your income too. And if you're a tenant, you get no write-off for being being a rental out there.
Great, thank you.
My pleasure.
Next question is, does LAPFCU offer loans in Northern California?
Yes, we offer loans in all 50 states. And that's something that's really come about. It's really weird. This year, we're getting a lot of second homes, retirement homes out of state. Right now, we have loans in Oregon, Colorado, Arizona, Nevada, Northern Southern California, yes, in Hawaii, actually. Lucky person, right? So we have in all 50 states.
Okay. Here's an interesting question. If I apply for a home through Habitat for Humanity and I need a partial loan from my credit union, will I be able to do that? Will they be able to do that with us?
Right. That's very interesting. And I will tell you that I have not had any experience directly with Habitat for Humanity, but I'd love to take a look at that and see exactly, where are we looking at, and looking to see if we can lend on that.
Yeah, that's a very interesting question.
That's the first time I heard.
Definitely want to make sure that we get that person over to you.
Yes.
Okay. Now, let's see. We have a couple more questions coming through here. Are there any options for no money down?
Currently, no, we do not have. I mean, the lowest that we can go is 3%.
Okay. Let's see, another question. What is your opinion of buying a mobile home? Is it worth paying rent for the land? Brad, what do you think?
My be honest is no. The challenge is you rent the land, and in the majority of the case, the land just keeps going up, and the mobile home value keeps going down. I've told clients I'd rather see them being in a condominium than being in a mobile home. If you're buying something maybe like a modular home out in Acton, or Aquadose or something like that, where you're getting a modular home and you're on 10 acres, 5 acres, that's a different story. But typically what the people are talking about, clients have been talking about, is buying a mobile home. Like I had one client talk to me, it's like, well, I can buy this mobile home, it's only $170,000 and the land lease is $1,000 a month. But if you look at that and the price of the mobile home, and it's more expensive for the loans in the shorter time frame, it's much more cost effective to get into a condominium, like going out into the Santa Clarita and getting something out there. You can get a nice little condo starting price, $230,000, $240,000 or something like that. That makes a lot more financial sense. You'll get appreciation, and you'll get some write-offs compared to just basically the modular home. It's like you buy a car with car tags and stuff like that in a mobile home park. So I would say no, unless you're getting something out like on Acton, like in with some big acres attached to it.
Okay, thank you, Brad. We have a couple more questions before we get ready to wrap up, and they're actually extremely interesting. Here's one. I want to buy my deceased parents' home from the Living Trust. What best loan program does LAPFCU have for me?
So if we're going to be buying, say, from family members or anything, we can take advantage of a lot of the programs that we have. It's not really an issue of the programs, just the issue is, looking at the title to make sure that, you have the authority to buy it, because we're dealing with trust, right? But when it comes to trust, it can be a little tricky here. So we want to make sure to analyze really how the title of the home is vested in, and to look at actually review the trust as well. So that's what we want to look at before we even talk about loan programs and things like that.
Okay. What are the qualifications for a 3% down? That seems like you need stellar credit. Am I missing something?
You're not missing anything. And as a matter of fact, stellar credit, no. The minimum credit score for that loan program, thank you for the question, by the way, 620. So any financial institution will tell you 620 is not stellar, right? So the thing is but I think it's reasonable for 3% down. There are other qualifications too. We're going to be looking at how much you're spending, either cars, the credit cards, or the house insurance and all that. And generally, we don't want what you're going to be paying in the mortgage and all these other debts to pass 50% of what you make. So we don't want it to pass 50%. There are other things, but these are going to be on an individual case-by-case basis. But generally, that's what we're looking at.
Okay. And we have another question. What is the first-time home buyer credit score requirement? I think you said
620, right?
The 620. And then the second part of the question was, what are the chances for a score under 620 getting approved? Now,
for a score under 620 to get approved for the 3%, it's probably going to be 0. And here's the reason why. Thing is the 3% program is pretty strict. And if we cannot get mortgage insurance, remember that mortgage insurance? We cannot get a policy on that, we will not be able to lend on that. So again, I cannot stress to that person that asked that question, the 620 is lower than 620, I would say, let's get an application in, because you're talking about one credit score, but remember there's 3 bureaus, and we're going to use the middle score, not the highest and not the lowest. So they might have a 600, but the middle score might be 630, and then the highest might be 650. That would be a credit minimum, meet the minimum of 620 right there. So definitely would not discourage the person from applying and finding out.
Okay. And what is better, a 30-year or a 15-year ARM?
So when it comes to which is better, the 30 or the 15, I get this question a lot too. It depends on your goals. Some people want to pay off their house in the fastest way possible with the least amount of interest. You're looking at the 15. If you're looking at, paying the least amount, you have other things going on, then the 30 would be the way to go. So that would be the short answer to that. And again, we would need to have a one-on-one to talk about your goals, financial goals, and we can get a product that would meet those goals or help you achieve those goals.
Okay. And it looks like this is the last question. I'm going to provide you all with some very useful information on how to get in contact with someone so that they can talk to you or get signed up for Home Advantage. Last question is, can I sell a home before I pay my mortgage in full? Brett?
Yeah, you can pay off your house at any time you want. If you happen to get a loan with 7 and 3 months from now you win the lottery, you can go and pay off your loan. 99% of the loans out there today, you'd have to talk with 7, do not have a prepayment penalty, which means if you pay it off sooner, you would have to pay a prepayment penalty. You don't have 7. You don't have any prepayment penalties on your loans, do you?
None of our purchase loans have prepayment penalties. Right.
So, the answer to the question is you can pay off your loan at, any time on a purchase. If you go out there and happen to win the lottery, or, your grandmother decides to give you enough money to pay off your loan after you've had it for a month, 2 months, 6 months, a year, you have no issues.
Okay. As we don't have a lot of time now, in the essence of time, I do want to encourage you, if we were unable to get to your question, or if you are in the process of typing in additional questions, again, I am sending out a survey. You will be able to leave your comments, and you will also be able to get in contact with someone to sign up for either Home Advantage. You can also get a complimentary mortgage consultant, and as well as speak with a complimentary insurance coordinator. You can select all 3 if you're interested in that as well. We also, as a reminder, to go to LAPFCU.org to register for Home Advantage. We can also, again, apply for a mortgage or pre-approval, check our rates, as well as use our mortgage calculator. Our direct line is 1-877-MY-LAPFCU. That's 1-877-695-2732. Again, I will be sending out a short survey within the next 2 business days following this event. This is a great opportunity to have an LAPFCU associate sign you up for Home Advantage and obtain that complimentary session. Please make sure to provide your name and the best number to reach you so that we can assist you in your home buying needs. If you're interested in calculating your payment on your own, you can also log on to our website. A big thank you to our presenters, Brad Korb and Severiano Rico, as well as those of you that took the time to tune in this evening. My name is Myra Kasu with LAPFCU. Until next time, have a good night.
Good night.
Good night. Thanks for everyone.